Yeah, and when the mode, so then she can, when the speaker talks, so she could be like the main and me could be at the side or whatever.
Oh yes, I'll do
And
that
full
now.
disclosure, Amanda is my sister-in-law, you know, and I'll full disclosure, my wife's on this call as well. Budgeting wise, I'm guilty. My wife's the budgeter. Like I don't, so you know they come from the same root, so it's no surprise that Amanda's great with budgeting. Well, Amanda, welcome to our group. Thank you for joining, and you know, introduce yourself and let's go.
Good evening. Hello, everybody. Hello, Principal Evolution. I'm excited to chat with you today about budgeting. Kevin, if you can make me the host, perfect. I'll share my screen. I love a budget. I follow every nickel that comes in and out of my life. I'm just really interested to see how my finances are going and where the money's tracking. So this is coming from a place of love, and hopefully you'll find yourself in the same position of love with your budget. So this is just a high-level beginner's introduction into budgeting. Everyone can see my screen, right? Great. So the first step, if you are new to setting up a budget for yourself, the first thing you want to do is identify your take-home pay. That's pretty simple. It's just your monthly pay minus taxes, which should be really easy for most people if you're getting a regular paycheck from an employer. If you are an entrepreneur or you work gig jobs and your income is variable, if you want to set up a budget, your best bet is to start with the lowest monthly income. So if the holiday season is your high time, you're selling, you're cranking in that money, you'll probably want to set up a budget built around a lower season where you're not getting that much money. Because if you have more money coming in, you will find a way to spend it. No need to worry. Just create a budget based off of your lowest estimate for the month. Now, if you happen to have a job that is so variable that looking back between COVID and everything, you still don't really have an idea of what your lowest monthly estimate would be, the next thing you'll want is some data. I cannot sing the praises of some of these financial apps enough. The one I'm highlighting on this slide is Mint. I'm sure a lot of you have it. It's a great tool. How it works is you sign up and then you can pull in all the data from all your accounts into this centralized place to aggregate everything. So all of your checking, your savings accounts, your RSPs, 401ks, any investments, any lands, also all your debts, student loans, mortgages, all of that can go into into Mint, and that will give you a high level overview of the monies coming and going out of your bank accounts. This
So
is also
sorry, Amanda, is this an easy thing to use? Because you know a lot of people who are getting into this sort of thing. Is it this something like you know someone could just kind of pick up and use and get into right away, or is it something?
well, it works as good as you treat it. So if you're in there and you're adding all of your accounts, then it's going to do wonders for you. If you've added one account and then you still have all these other accounts and it's not being pulled in, you're not getting a clear picture. So I would say just do the due diligence. But it is very easy to add accounts. You pretty much just have to look for your provider. Maybe you'll find BMO. And then you'll put in some credentials and it'll trigger an API to pull in all the data from your account. So it's all in one centralized place.
Yeah, and then again, we always have YouTube and stuff to teach you how to do these things. I'm not saying it's super easy, but it's not that difficult. But once you do the setup, there's a lot of data that you can use.
Yes. So this will give you a clear idea of how much income you're bringing in. And it also tell you what you're spending, and it'll make categories for that. Pretty simple. This is just another screenshot of what the app looks like. So you can see what you're spending. It's categorizing things that it's automatically pulling in from your checking accounts and putting them. So it does have a little bit of AI going on. So it's going to assume some things like, oh, if you're at a gas station, so I'm going to assume this is gas.
One second, Amanda. So
sorry, you cut out. I think he wanted to tell you there's some people in the waiting room. I know you're a host, Amanda. Can you just accept them?
Oh, sorry.
No, it's okay.
You're on mute.
We need to upgrade our Zoom account so we could do it.
Do it all. Sorry, I will continue to watch the way.
No, it's all right. Sorry, go
You
ahead.
know what?
So back to what I was just saying, here's some more screenshots for the app and some of the data it'll give you. But once you've established exactly how much you're bringing in every month, you've set up your mint, so you're pulling in all the data to track your spending. The next thing you'll want to look at is all of your expenses. You'll break your expenses out into needs versus wants. And then you'll also want to take note of your fixed expenses versus variable. You know, obviously there's not much you can do about perhaps your Netflix. That's a fixed expense. It's not going to change, but your hydro bill is variable. Depending on how much water you use, it'll fluctuate. So I've given some examples here, but something you want to take note of is always include some guilt-free spending. Like, a budget isn't meant to be this terrible thing that you've committed yourself to that takes all the joy out of your life. If you like to buy magazines or join fantasy football teams or whatever it is that you like to do with your petty cash, put it in your budget, because this isn't about hurting yourself, really. So you've identified your take-home pay. You've listed out all of your expenses. I think the best bet for building out a budget is to track expenses that come up regularly every month. You know, you're always going grocery shopping, you're always getting gas. You know, back to school shopping happens once a year. You may not need to put that in your budget, but start with the basics of things, expenses that come up every month. So I've given an example of a budget. This is actually reflective of one of my budgets. And what I do, although the app is great and I love Mint to death, I am a little bit old fashioned and I do like to keep an Excel spreadsheet. I track a budget that goes based on pay cycles. So it's bi-weekly for every paycheck. And then you split everything out based off of the paycheck. So you know exactly what to do once the money hits your checking account. Some things to take note of. I generally say, as a rule of thumb, if you have a monthly expense that comes in at about maybe 8% or less of your paycheck, maybe you can pay for that all in one go. And so, for example, I have a telecom bill for like internet and cable. It's less than 8%. I'll pay for that in one go. Some larger expenses you may want to divide up over the month if you are getting paid multiple times a month. So utilities, it's winter. Utilities are really expensive right now. So I'm just dividing that over the 2 paychecks every month. So I'm always pulling it out. Especially, you don't want to find yourself in a position where there's one paycheck a month where all of these things are coming out. Your rent's coming out, this is coming out, and you don't have much capital left over at the end.
Amanda, I want to jump in for 1 second here. This is awesome. For the novice or the person who's not organized, how do you think one gets into the habit of actually wanting to do a budget? Because I think a lot of us think that we have a budget, but really like Derry just mentioned, our money's going everywhere. Do you know what I mean? So what do you think? What kind of mindset or steps does one get in to say, like, you know what? First step to actually start writing a budget or putting things in it, because I think once people can actually get to the app and input information, it's successful. But what do you think something maybe a success habit for someone to actually start to get to the budget point that they'll actually do a budget?
I would say I would start with the app, to be honest, to do a budget, because typically what you'll want to do if you are that far removed from your finances and it's just hear no evil, see no evil, speak no evil, you may want to start just getting that data in so you can just see trends. So it's not necessarily about saying, oh, I'm only going to spend $300 on groceries. It's let me set up this app so I can see over time how much money I'm spending on groceries and see if that aligns with my values. Like, do I really want to spend this much money at No Froze every month? Or are there other things that are more important to me and higher priorities? So I would say the first step is you don't even need to sit down and say, this is how much I'm going to spend at the barber every month. Just track the money. Know where your money is going, and then take a look at that data and say, is this aligned with my values and my goals?
And to your
That's a
point,
very good
Amanda, I
point.
was gonna say there's a similar app called Milo. I do the exact same thing, and it just comes out of your bank account. It's similar to you know, when money comes out of your paycheck and you don't even notice it, and it just goes to a separate account. Same thing. Same thing as the same app you're talking about.
No, I think she's talking about Mint just tracks your stuff, so it
Mhm.
categorizes it, so you can see roughly where your money is going. Is the one you're talking about? Does it save money for you, Milo?
Yeah, yeah.
Yeah, the one she's talking about is different. It just you could just see everything that's going on. So you go back and you can see, okay, how much did I spend in my car? How much did I spend on going out? How much did I spend on alcohol? Like you could just go back months or even a whole year and see what you spent all your money on. So that's what Mint does. It brings it together in one view so you can see where everything went.
Or if your wife has all your accounts, when you go spend somewhere, it pops up on her phone.
Yes, exactly.
But that
Um,
also, I heard about. Sorry, Amanda, but Damien, I think that's also a very good app. If you need to save and you want to save without even thinking about it, I think that is what you're talking about, right, Milo?
Yeah, it's the exact same thing. It just comes out. It comes off of your bank account. Yeah.
Yeah, go ahead, Amanda.
so Kelsey, just to finish wrapping up your question, I was just saying start with the data. Then once you have a couple of months of data and you're ready to sit down and say, okay, where do I want my money to go? As I mentioned, these are examples. What may work better for you is breaking down things by retailer. Like maybe you get everything at Costco. You know, you get your body wash, you get your groceries, all of it. So maybe you just want to have a line item for Costco and you know you're going to spend, $700 there a month on miscellaneous expenses. I also say put in things that are honest to your lifestyle. If you like to go to the LCBO and you buy cannabis, like put that in your budget, track it. It's where your money's going. It should have a place there. And the last thing to say, especially once you get to a point where you're no longer having to pay off a whole bunch of debt and you do have some more flex in your budget, you may want to track for things that you know are coming up, bigger expenses. This example here, my mom turned 70 in about 2 years, and me and my sister had already talked about getting her like a super nice party for her 70th birthday, which is going to be really expensive. And so I've decided to just start slowly putting a little bit of money away so that in 2 years, when she turns 70, I have a couple of $1,000 sitting down to throw this party. So you always want to be prepared for things that you know are coming up.
One quick thing: if you're not speaking, can you put yourself on mute, please? Thanks. Go ahead, Amanda.
No problem. So on the previous slide, I had mentioned breaking up larger expenses into two parts over the course of the month, depending on your paychecks. And so you're thinking, okay, yeah, but if I just leave that in my checking, what if I use it? What if I accidentally go to the ATM? A great solution to that is have two checking accounts. You'll want a checking account that you keep that debit card on you, and that's the money you go out and spend and use for things. And then a different checking account that you don't keep that debit card on you. That's where you can transfer money for automatic payments or larger expenses. So you should note that I know banks are trying to charge an arm and a leg for you to have an account. A lot of the major banks will offer you a secondary checking account at no fee if you keep like a minimum balance in it. So that'd be a
Or
great
you can
place.
use Tangerine. I love
Or
Tangerine.
Tangerine or PC Financial. There's plenty of banks that offer no fees as well. But that way you can say, all right, Rogers and Hydro and all of these things are going to be on automatic payments hooked up to my second account. So there's no need to worry. That being said, all of what I just went through was an example for budgeting for a single person. And obviously, if you're living with a partner, it's a whole household. And so there's various ways you can decide to do a budget for a household. You can either sit down and have a detailed conversation with your partner and have a whole budget for everybody, or you can just talk about joint expenses and keep your own personal budget, taking into consideration joint expenses. So there are about 3 different ways couples typically do budgeting together. Neither is right, neither is wrong. It's what's best for you guys. There's a proportional method. So you put together the 2 incomes coming into the house and then see what proportion somebody's making. So for example, we have Alana and Mark. Alana's bringing in $60,000, Mark's bringing in $40,000. So proportionally, it's 60% and 40%. And so all joint expenses would be split 60-40 between the 2, which seems really fair, but that can also leave people feeling burnt. Maybe you feel like you're being subsidized by your partner. Maybe you feel like, why am I being penalized for making more? So that just really depends on the vibe between the 2 of you. Another example is just raw contribution. So maybe you sit down and you go through your mortgage, your hydro, you tally all of your household costs, and then you just split it down the middle, regardless of who's making what. That can make everything feel fair. But if there's a huge gap pay, that may seem unrealistic for two people. And then lastly is the complete combine, where all of your money just gets put into the same account. Both of you walk around with debits, cards, and I am you and you are me, and that's how we roll. Regardless of whatever your method is, you can still create either a household budget for the 2 of you and everybody else under your household, or you can say, hey, I know that I have about $2,000 in expenses that I need to contribute to this house. Let me write that down in my budget and see everywhere else my money's going.
Where's the He-Man budget? Where the He-Man budget? Where he just says I'm paying for everything? Where's that budget?
You can have that budget if you want, Kelsey, if it's important to you.
Yes, Kelsey, you can have that budget if you want.
Pretty much. The whole goal, though, I would say around budgeting is first, track your spending in a financial app. It'll simplify this. Data is key. Once you got your financial app set up, then you'll want to determine your take-home pay, list out your fixed and variable expenses, and then again, plan ahead for expected costs that are going to come up. And then as long as you get through your first budget and you realize, hey, I have a positive cash flow and I have money left over every month after all of my expenses, create goals for your remaining income. Start off with emergency savings, so valuable. Everybody needs that little nest egg. Pay off additional debt. I call it the get the fuck out of Dodge fund. And what I'm referring to that is, you may just want to keep some cash on hand in your house. And I'm not talking about petty cash like, oh, the pizza guy came here and let me just pull $20 to pay him. I mean, shit hit the fan. We need to get out of town and bounce and leave. Or if something's not that crazy, if we all remember the blackout on the Eastern Seaboard. You couldn't get money out of the account because there was no electricity. In situations like that, you probably want to have a couple $100 sitting in your house just in case. So I encourage everybody to keep cash in your house, because you never know when you just have to, burn your house and run.
I remember that. You couldn't buy nothing.
Exactly. And then retirement. Always get that retirement in there. But I just wanted to open up for discussion. If anybody has any conflicting thoughts about some of these things around budgeting or questions, go ahead.
Who honestly has a budget? Maybe people can put a 1 in the chat or something. Who honestly has a budget that they go by? Who honestly has a budget? I'm not gonna lie to you. I don't have one. My wife kind of budgets for us. So we got a couple of people chiming in that they have. I'm assuming mostly women. Guys, okay. Men, you guys have a budget? Let's hear some men. Damian, yep, Damian, you got to. You're on point. You're whiteboard. Anyone else? Anyone else of them? Derry, you have a budget? Derry has a budget. Must. Derry's organized.
Oh, Amanda, quick question. There was a comment about buying everything on credit cards so you can get the points. Does that help with your budget, or do you use any of that to get free stuff, or do you have any recommendations about that?
I do. So for example, if you have a credit card with cash back, I have one with cash back on groceries. And so I always put my groceries on that credit card, but I do pay it off as those before the end of the month. So I don't let
That's
it
key. Because they try to trick you to use a credit card, but then they charge you big fees. So you're basically paying for all the stuff you technically get for free if you don't pay it off before the end of the month.
I think you made a great point, Amanda, as well, about being real about yourself, what you spend. You know, we might have a Tim Hortons vice or any other little vices. I think you made an excellent point. Just be real about putting those stuff that you're really spending money on all the time on. So I think that's something that really hit home for me as well, is that point that you made there.
Yeah, because you don't create a budget just so you can feel bad about yourself. Like, that's not the point. To look and be like, oh no, I spent more on clothing this month. If that's what is valuable to you, put it in your budget. The idea is that you just want to know where it's going and make sure your choices are informing your goals and values. And so, yeah, you may have to sit down and be like, hey, how much money I spent on clothes is no longer aligned with me saving for a down payment. So that needs to change. But it's just always good to know. And I saw a comment there that someone likes to use cash, and that's fine as long as you know where that cash is going. Like, could you sit down and think back, we're in like February 9th. Can you think back over the beginning of the month and have a rough estimate of how much you've spent?
Yeah.
And so.
And the key is, they always say it's not how much money you make, it's how much you keep. So budgeting is the key to help you keep more of your money so your net worth can grow. That's another good thing about the Mint app, because it does track your net worth. And then by month, you can see, is your net worth going up or is it going down? And if it's going down, you could get in trouble real quick.
I think I have a good story regarding that. So I'm in Mint, it's tracking your net growth. And I'm living in New York City, and I was living with roommates to save money. And I finally was like, I'm getting my own place. I can't do this anymore. And you could see in Mint, over the moment I decided to move out and my living costs increased exponentially, my net worth wasn't growing up at all. There was like a solid 2-year period where it just stayed the same. And luckily, COVID hit, and all of my discretionary spending just stopped, and I could save now. But that's what I really loved about the app, that it could tell me, like, you're not growing at all, Amanda. That being said, I didn't feel bad because I know where that money was going. I know what I was spending that money on. And those were specific choices I made that I was like, hey, I was going to slow down for 2 years because there are other things I wanted to do with my money.
Very good point. Very good point. So I hope everybody starts their budget. We're going to ask again next week, see who started a budget, or at least is tracking their expenses. So is there any other questions for Amanda? I know she's been trying to get me on my budget for like many years, and I was laughing at her before, but now I know the importance.
Can I ask a question? It's Michelle. Can you hear me?
Yep.
Do you think it's unreasonable? So I'm on I don't know if it's a budgeting to pay off journey with my cards and my line of credit. So I basically have left, I guess, no budget for myself. And I'm just only paying these debts off, just paying every living dollar that I have. And the budget that I have is pretty meager. What are your thoughts on that?
I would say, one, I know it's hard in COVID, but if there's any way to increase your income, a second job, a side hustle, that'll always help. That may not work with your lifestyle, taking on another gig, but that can always increase your take home. And then two, what other levers in your life can you pull to alleviate some of your costs? I mentioned I was living with roommates, which, you know, people, grown-ass adults find embarrassing, but if you could take in a roommate and cut your living expenses in half, you know, is that worth it just to have the extra freedom? So I think sometimes we forget some of the inherent privilege we have in our lives, and just that we have family and friends around us who can support us. And there are different ways we can set up our life to reduce costs. So I would say increase your income if possible. If not, see what you can do as far as roommates or anything else that could try and keep down expenses.
Oh, Amanda, I'm working 7 days a week. What I'm saying to you is that, is it unreasonable to, like, if you have a lot of debt and you're trying to pay it off, to just only use all of your working income to just pay that and not and stop paying yourself? So, you know, the notion of pay yourself at least something. So I've now even taken away the pay myself portion just to try to pay down these debts in the next 12 months. I just want them gone.
But
So, you know,
sometimes I can touch
realistic.
on that. Sometimes it's better to pay down the debt, because if you look at how much you're paying on your credit card, even if you paid yourself first that money and put it into an investment, most times you're not going to make as much as what the credit card is going to charge you. So it's almost better getting rid of the credit card debt, because you'll get further ahead. Because once all the debt is gone, then you can start building. That same money you're putting towards the debt, now you can start building, because most credit cards are at 19%. What savings or investment is at 19% guaranteed?
Yeah.
And maybe pin down one of them, because, you know, sometimes you'll have several things to pay down. Maybe try and pin down and pay off one, so you know one is out the way. Do you know what I mean? Like,
Yeah, I think
like,
all that the snowball effect.
Right track. Like I've
And
paid
also,
down, but I think that this month, I'll be honest with you, like in January, I was like, so what am I gonna do? Just pay everything to this credit card and I have nothing. So then I actually took like $1,800 and decided to do my first stocks. And I'm like, was that the right decision? You know, because now I'm thinking about it after the fact. I'm like, crap, maybe I should just put that 1,900 back on the credit card instead of paying myself, so to speak. You know what I mean? But I just kind of, you know, I guess.
well, okay, two things.
Go
The
ahead.
faster you pay off that credit card, the better,
Yeah.
because the interest keeps accruing month to month to month. So
Yeah.
a lot of that percentage that you're paying is interest. So definitely focus on paying the credit card. Number two, you want to make sure that if possible, sometimes they offer, like, because when you have several credit cards, they'll say, hey, transfer your balances to our card, and they give you a lower percentage. And then you can consolidate all of your debt onto one card at the lower rate. But then the key is not to use that card for spending, because then usually it goes back up to the 19%. But if you get something that in the mail that says, hey, we're going to offer you I don't know, 9.9 or whatever percent for 6 months, take it. You can cut your stuff that
I
way.
have a slightly different perspective. And Amanda, I'd like to hear your thoughts, right? Because a long time ago, I was learning the psychological effects of money, as well as us who are often paying down debt. And we often will look at our debt and pay our debt down and not celebrate ourselves, not reward ourselves. And oftentimes that becomes a negative cycle and you fall out of that cycle. Then one day you go splurge on yourself. You didn't budget for this splurge, and now you screwed your whole budget for a few months because psychologically you didn't let yourself have the full time to do all the things that are necessary. So I think it's great that you're focusing on paying down your debt, but I've learned that you do need to have your 5% that is your party money, and your party money could be buying stocks for yourself, if that's what gives you joy, to reinvest it back into yourself. But we have to remember the psychological effects of what we do with our money. And you could end up working these 12 months and pay off your debt and have a heart attack because you worked too hard.
True.
Well, you know what? Not only that, like during COVID, so I was paying my line of credit, which is at a good rate, really well. And I found myself with about $8,000, and I was like, what? And then I woke up one day and the bank took the money back. the line of credit. So I was like, what the hell? I was like, you guys reduced my limit and I paid all this money off. Like I was just livid. And they said that with the line of credit for COVID, that's what they've been doing to a lot of people. So they're not able to create, a debt. So it's like, okay, I spent this time 7 days a week working to add this back, but they took it away, so to speak, right? So I was kind of like, well, is this the new trend during COVID? They're just going to keep decreasing line of credits. They don't do it to your credit card, but they'll do it to the line of credits.
No, almost all financial institutions are reviewing all their clients, and if they feel it's necessary, they will make reductions to your limit. They may even cancel your card. that's due to the situations that we're in right now, and it's only going to get worse. There's going to be more. So credit cards, even line of credits, all of those, they're doing constant reviews. So it's coming. I work for a financial institution, and they did that to my credit card that belongs to them. They pay me, and they reduced my limit. So
yeah, and I felt jaded after that, because I felt like I was on such a good roll. I saw the change in the balance, and then all of a sudden they took it back, and like now here my limit is, now my debt ratio seems higher, right? Mm-hmm. Even though I technically just paid $8,000. So I just decided that, I didn't want to continue that cycle. I at least want to take a couple $100 a month and just invest it into something, so I could see it grow just in case, right?
Yeah, some very good points, because the psychological aspect of saving to see money grow, it does help to see that you are progressing. But then also think about it, when you're getting rid of debt, that is also a progression. It's almost like you're digging yourself out of the ground, because debt could put you in a hole quick, because you always have to look at the interest rate you're paying. Maybe strategically pay off one that's higher than the other, but debt is not a good thing to have if you're the one paying it. As long as somebody else is paying it, or you have a system where somebody else is paying that debt for you, then it's good. But once you're paying it out of your own pocket, it's never good.
If I could jump in here real quick, Michelle, do some research on accelerated banking. What this is you're using your line of credit to pay your credit card. And by doing so, you're knocking down the higher interest rate debt, and you're keeping your line of credit portion maxed out. Because your line of credit is always a better.
I did it already.
Pardon me?
I did it already, and I messed up. So.
No, but that's what you're doing month to month. It's not just one time. You use this month, you use your line of credit to pay your credit card, then you pay into the line of credit. Because by doing so, you're knocking down the higher interest rate, you're keeping your portion of your line of credit. That way the bank's not going to just come by and say, oh, well, you've paid down, you have 8,000 available credit on your line of credit. Let's take that away. They want to take away the credit portion that pays the least amount of interest rate to them. They want you to have the higher interest rate product.
Right.
Does that make sense?
Yeah.
So just look at accelerated banking. You're doing the right stuff, but just like say, I'm not sure if I'm pronouncing her name correctly, and I apologize, said you should still reward yourself. And so don't feel bad. Okay. I think you're doing an awesome job, in my opinion.
Another strategy that can be used. Sorry guys, I'm using my cell phone. I'm a little mobile right now. It's choking.
Okay.
That you can actually use is you can actually set the dates on some of your credit cards, your due dates. So typically, people use the 1st or the 15th of the month for most of the bill payments. But what you do essentially is you set them apart. So you're leveraging credit that way as well too. I learned this strategy actually recently when you're setting that date apart. So when you're actually getting rid of some of your debt, even though the higher interest is on one of the cards, transferring your credit card debt to the other card as well will help you, because of the due date is actually further out. So what you're doing is essentially you're paying off one, right? You're bringing down your debt ratio, because you said the debt ratio would be high because they reduced your line of your credit line, right? Yeah. So doing that as well would actually change your due dates for each of your credit cards as well too.
Okay, that's a good idea. Thank you for that.
Well, first of all, I want to say thank you for sharing, because I know a lot of us are going through the process of trying to get financially stable and trying to become wealthy. So thank you for sharing, because a lot of us have gone through that. It's one of the first steps to get your debt under control, remove debt, so then you could start going in the right way and building your net worth. Again, thank you for sharing. These are the type of things we like to share, because eventually, like next month or next year, when she's all done, what she's gonna do is come back and tell us all her strategies and what worked for her to get her in a better place. So again, thank you for sharing, because I know a lot of people, they don't want to talk about, oh, I have all this credit card debt, I'm struggling. No, people want to hide in the corner. So this is why we want to open this discussion, because a lot of people are going through this stuff. It's not just you. I bet you there's somebody else on this call going through the exact same thing.
That's
I had to go through it like 2 years ago too. I did it myself. Go ahead, Kelsey.
And for some of the people that are,
we definitely have a culture of shaming with regards to our debt and credit and so forth like that, that we feel absolutely shamed. And some of us will go down to a shame corner and go all the way to a rut before you reach out to someone and say, listen, you know what, I'm kind of going wrong. Like someone, like maybe a friend or someone, to say, like, help you out with the budget, or help you understand, maybe you could do something a bit different because you just didn't know. So again, I think this is more of a bigger topic than I even anticipated. And I'm glad that the response has been like this as well. And I'm sure most of us are going to take back from this thoughts about our budgets, how we spend our money after this conversation as well.
just for those going through the same, close to the same situation as well. And Yvonne spoke on a lot of credit card companies cutting down people's actual lines of credit and so on and so forth. And I've heard situations where people's credit cards are actually being canceled. You never want to have your credit card at a zero balance. You always want to keep some small balance on your credit card. That way they can't cancel it. They won't be able to cancel your credit card if there's a balance on it. But the minute it reaches a zero balance, then the companies are actually able and capable of canceling your credit card. So also keep that in mind as well.
That's a good point.
I don't want to contradict you, Chosen, but they can cancel even if there's a balance. What they do is they put you into, in our company, we call it a credit bust out, like a credit bust out category. And they basically SMS, text you and frustrate you to death till you pay it down. So
text me the name of that company so I know to avoid it. Well, most of these stuff is what I'm learning on the US side. I know it's a lot similar over here, but that is absolute crazy. That is crazy.
Listen, we're in a pandemic.
Business. It's a business. Yep. But they've been saying that from the beginning of the pandemic, is what banks are trying to do is cover their ass. So they may feel that a lot of people are going to be behind on payments. So say, before you could use my credit card to pay off your mortgage or your rent, I'm cutting it off right now. Like, it's a business move. You have to think about them. If you were the bank, I would do it. I would do the same thing. I look at certain clients and they had too much debt. No, you can't take no more from me. Like, if you think about from the other side.
That's right. And it's not necessarily people who are in bad crediting situation. It's just they start pulling your, credit report and seeing how much people you owe. And, if you're an investor, you could owe a lot, but you could be making a lot as well. And they make their decisions based on all of those. So don't always feel ashamed or messed up or whatever because a credit card company cut your limit. Don't feel messed up. Just take a look at your situation and make sure you're doing the right things.
Yeah, I agree. Yeah, but once your financial situation is great, they're going to want to give you more credit. And that's what should be on the side you want to be on. You want to get them to be begging you to get their credit card. But again, thank you everybody. That was a great discussion. We want to move on to our other topic. I know last week we were talking a lot about crypto, stocks, options, and marijuana, and all these other things we were talking about investing in. I know the options topic was a little complex, a little for experts. So people who are not as well versed in those options and stock market and day trading and stuff, have our other guests has a easier way to invest in some of these things. If you don't want to be reading the charts and trying to figure out when to go in and so forth, I want to introduce Damian Alexander. He's been on the Meetup call a few months ago, and he was discussing like more stuff around insurance and stuff, financially. He's a financial advisor. He works full time as a financial advisor. I think he's been an advisor for at least 5 years or so, a good while. He's been doing it for a very long time, and he reached out to share to the group because of our last discussion last week, how so many people were into it. He wants to show you another way of where you can invest in some of these things, but it's an easier way. I'm going to give the floor over to Damian Alexander. Again, thank you for spending time here.
No problem, no problem at all. Are you going to give me access?
Yes, right now.
Perfect, perfect.
We need the whiteboard, Damian. We need the whiteboard.
The whiteboard ain't coming out today. Not today, not today. I just wanted to highlight three different alternatives. Let me see.
Yeah, there you go. You should be hosting now.
Give me 1 sec. I just want to highlight three different alternative strategies to investing into individual stocks. I know on the Principal Evolution board, there's a lot of stock talk, and there's a lot of different symbols that come out, and it can be overwhelming. I mean, even for me, I'll catch a symbol and I'm like, oh, what symbol was that? And I'll put it into my stock watch list and try to follow it. And it can be overwhelming. I mean, everybody has full-time jobs, and it can take a lot of time. So I kind of wanted to focus on three different sectors that are growth sectors. That's the cannabis sector, right? The innovation sector, and the Bitcoin sector. Three different sectors that are all put into different funds. Now, if you guys are not familiar with how funds work, mutual funds. So two of the investments are mutual funds. So what a mutual fund is a basket of different stocks. So what you're doing is diversifying your risk. So instead of taking your money and putting into one stock, you're taking your money and diversifying into a whole bunch of different stocks, right? So that helps you out. At least you get invested into that sector without missing out. And you're kind of leaving a lot of the brunt work to the investment, the portfolio manager. So a lot of times, for example, if you want to get your plumbing done, what do? You go call a plumber. If you want to get, I don't know, legal work done, you go to a lawyer. Same thing with investments. You want to get a professional manager to help you out with that sector. All right, so what I wanted to do was first highlight what is called the 9-point alternative health fund. Now, this primarily invests in cannabis, but they kind of quote it as a health fund, right? So they have a lot of latitude to go into the health sector. So about 59% of that fund is invested in cannabis, all right? So this is what is called the fund profile. Can you see this? Or do I got to share the screen? Let me see here.
You have to share. You should be able to share option now on the Zoom screen because you're the host now.
Give me 1 second, people. Okay, share screen. Share, okay. So this is the 9-point alternative investment fund. So what we're doing here is we're taking a lot of the risk from you, and we're placing it into the fund manager. So instead of you trying to pick these individual stocks and see which one hits and which one doesn't hit, these fund managers are looking at this daily. They're professionally managed portfolio. So you don't have to worry about kind of figuring out which stocks hit, which stocks are the ones to hit. And sometimes I get confused with that. Like, which stocks are the ones to pick? Do I stay with this? Do I sell it now? This particular fund will help you with that, right? So year to date, it's 11%. But last year, if you look at here, it did about 54%. So what that means is your return on investment was 54%, which is pretty good, right? I'm not too sure how a lot of people are doing with their stocks nowadays, but 54% is really good return on your investment for the year, all right? Now, primarily, they do invest in cannabis, mostly cannabis, but they do venture into other other health sectors, right? And now, just a question for the floor: is anyone familiar with how a mutual fund works?
Well, I wanted to say something quickly as that to kind of jump in, maybe can answer. Due to the current climate now with the some of the hedge funds being the bad guys and this little guy against the bad guys, like now when selling mutual funds or showing people about mutual funds or getting people to believe in a mutual fund, like what kind of opposition do you get? Maybe I'm kind of taking it sideways, but what kind of opposition do you get rather than from people who just want to just buy the individual stocks? I know you're saying that the portfolio managers take care of it, so it takes care of. But so, what kind of opposition do you face, and how do you kind of overcome or give it to this person like myself?
Well, hedge funds are a little different than mutual funds. Like hedge funds are extremely high risk. A lot of times you have to be an accredited investor. So you basically have to do a course in order to invest into that fund, right? So hedge funds are a little bit different than a mutual fund. Mutual fund has a little bit less risk, a lot less risk compared to a hedge fund. So that's kind of how the difference between a hedge fund and a mutual fund. Mutual funds are highly regulated. I mean, regulation is up my what when it comes to me putting a client into a particular fund. For example, this is a high risk fund. I can't put you into this fund unless your investor profile says that you're high risk. What they'll say is, no go, Damian, you can't put this client into this fund. So there is that barrier of entry. Whereas with a hedge fund manager, they have so much latitude to invest in a lot more riskier stocks than, say, a mutual fund. Does that kind of answer your question a little bit?
Yeah,
Kelsey?
no, it does. Yeah, no, it does definitely.
Yeah. So mutual funds are a tad bit different than a hedge fund. Now, the rate, like I said, the rate of return on this fund was about 54%. Let me just share this. Give me 1 second here. Technology-wise, I'm suffering right now. All right, can everyone see this screen now? No, yes?
We're still looking at the PDF.
Okay, still looking at the PDFs. Stop sharing.
We can see something now.
What do you see now? Sorry, I'm
Active management.
Oh, perfect. That's what I want you to see. All right. So the key to this particular fund is it's actively managed. What does that mean? It means that the fund managers are actively buying and selling shares opposed to an ETF. ETF, a lot of times what they're doing is they're balanced quarterly. So every quarter, so they have their mandate, every quarter what they do is they rebalance it. Whereas an active manager, they can take action right now. So if they see that the markets are moving a certain way, what they'll do is they'll sell a lot of the shares, moving into another sector. Their main goal is to make as much money as possible for that particular fund, right? So with this fund, the generated returns is 37.72% in this fund, right? Now it outperformed that particular index. So it's the healthcare index. The healthcare index did 11.24%, right? And if you look at the ETF, which is HMMJ, right? It lost about 1.42%. So what is HMMJ? That's basically the ETF of the healthcare cannabis sector.
What does ETF stand for, Damian? ETF.
Oh, exchange traded fund. Does everyone kind of understand what an exchange traded fund is? How that works?
Yes, maybe give us a piece because I'm feeling maybe not.
Okay. So exchange traded fund, it works. It's basically a pool of funds, and you can actively trade that on the NASDAQ or sorry on your brokerage account. And basically, it's a pool of funds put together to a specific sector. And what happens is it kind of um, tries to mimic a certain market, right? So whether it be the S&P, which is a S&P index, or whether it's the Nasdaq, it's trying to mimic that particular sector. It's a passively managed fund. So what we have here is um, algorithms used to basically take care of that fund instead of someone actively managing that fund. All right. So that's basically how it works. So we're taking a lot of the legwork away from, say, you buying a particular one share or one stock, and we're putting it into a fund where somebody else is kind of taking care of all of that for you, instead of you having to worry about, okay, should I buy now? Should I sell now? What should I do? We're taking that kind of risk away from you. The funny thing about an actively managed fund is I was talking to one of the fund managers one time, and he was kind of talking to me about, what's going on with the funds, and he goes, "Look, man, when it comes to some sort of market correction, I just call up that company and find out what is going on." A prime example, and when it comes to this fund, is I'm not sure if everyone is familiar with Aurora. Is anyone familiar with Aurora Cannabis, the
Yeah.
stock? One thing he told me, and when he was doing his first presentation on this fund, I was wondering, I was like, well, why aren't you invested in Aurora? Because this is one of the top cannabis funds top cannabis stocks in Canada. Like, why aren't you investing in this? And he looked at me, he's like, yo, we went to that facility. And I go, okay, well, what happened? He goes, let's just say that management team is a little shady. And I didn't quite understand what he meant. And he kind of went on. He's like, something about that management team is not right. And we're not going to put our investors' money into that company. Lo and behold, the stock dropped majorly, right? So the management inside of a stock or a company is extremely important. You want to make sure, okay, they have extremely good management. And that's what kind of drove me to looking towards more of an actively managed mutual fund. All right. Now, I'll just go through some of the different stocks that are inside this particular fund. So we have True Leaf Cannabis. So it's an actual stock. It did 161%, right? It's a medical cannabis company in the state of Florida, and they have approximately 51% of the Florida market, right? We have Green Thumb Industries. It was up 143%, right? They have licenses and dispensaries all throughout the U.S. We have Tirascent. It was up 122%. It has operations in Pennsylvania. We have Curaleaf, right? It's up about 86%, operations all over the U.S. And one thing about this fund that's very important to note is right now they have a lot of their monies or a lot of their funds in Canadian producers, but they're not too bullish, so they're not too excited about being in Canadian producers. The reason being is a lot of these Canadian producers right now, they're operating at a higher cost, and they're not really, they can't really produce higher revenues, right? There's only a handful of Canadian marijuana stocks that are actually making money. And one of them is Village Farms. Village Farms, really good stock. It's up 56%. And Amphira is up 37%. So if you guys are looking for individual stock picking, what I often tell people is kind of look at some of these funds, like look at some of these mutual funds, see what they're interested in. And if you're not interested in the fund, maybe you want to shift some of your focus over to what they have invested in, because they can actually call up these fund managers and find out what's going on, right? Find out what's behind the curtain. If they can't answer certain questions, they're not going to invest in that fund. And then that's kind of how I do my stock picking is, okay, is this fund investing in this? Like, what's going on here, okay? And that's kind of how I do it, right? Now
So
with this, sorry.
mutual funds, Damien, is kind of good for those. Maybe like you're saying, like, because I know in the chat sometimes you get the stocks, it's like, like this. So a person who's novice might see like, oh my God, I don't know what to do. So a mutual fund may be someone who wants to, put something in, let someone else deal with it, let it make it solid returns, but I'm just not heavily active in it because I just don't got the time or the patience to look into it. But you still want to invest in something, you don't want to be left out. Maybe a mutual fund is something that you'd want to look into.
And that's exactly it. That's exactly it. Sometimes you don't want to do all the research, or maybe you don't have the time to do all the research in a particular sector, but you hear that this sector is doing really well. Okay, well, this cannabis sector, I keep hearing about cannabis. How do I get involved? Okay, well, maybe you want to start putting your funds into a cannabis fund instead of concentrating on these individual stocks. Because a lot of times we are the last to hear of all this information on a stock, right? By the time we get the information, you know, these other companies are 10 times ahead of us, right? So sometimes you want to take some of your funds and put it into a mutual fund. I often say, if you have $20,000 to invest, maybe you want to take 15, put it into one of these funds because you know it's actively managed, and take 5,000, maybe put it into your discount brokerage account, your stock portfolio account, and trade that and see if you can do pretty well. Because a lot of times we don't know what's going on behind the curtains. I can't personally call a stock manager and find out what's going on with this company. You know, if they have bad earnings, can I call up one of these companies and find out what's going on? I can't, but these fund managers can, because they have hundreds of millions and often billions of dollars invested into one company, and they need to know what's going on.
Can I just ask a question about
Sure.
dividends? So how do the dividends pay out? How did that work with the mutual fund?
It does. I gotta admit, someone wants to come in. Sorry. Okay, yeah. It depends on the fund. Some funds they'll do what is called return of capital. Some are dividends. It all depends on the fund. That's when you got to look at the fund prospectus. What's going on with that fund? This particular fund won't protect. They're not paying out dividends at this time, right? Because they're relatively new. They started in 2017, right? So they're relatively new within this sector. Does that kind of answer your question?
Yeah, so if my money's in there, as it's gaining, what am I getting?
You're getting the growth on the investment, right? So the dividends are something that's paid to shareholders as an incentive for holding that particular stock, right? But if a company doesn't pay dividends, what happens is the money keeps getting rolled over into that fund, and you're benefiting from the growth. But if it doesn't pay dividends, it's not a bad thing. But not all companies pay dividends. Dividend is kind of like a sweetener. It's like a thank you, saying, hey, you know, thank you for investing in our company. We're going to give you this, right? Answer your question a little bit? Yes, no?
I'm good, thank you.
Okay, no problem. So has anyone actually been following the cannabis sector at all in this chat?
Just the black market.
Just the okay, well, that's cool. That's cool. So I just want to give you a quick synopsis for 2021. We see great growth within the cannabis market, especially in the US. There's a lot of legislation that's opening in the US that's going to be extremely helpful for the cannabis sector. Great investment opportunities. What I would suggest is anyone that is invested in the cannabis sector, you may want to look at your portfolio right now, because what happens in 2020 was an extremely successful and great year within the markets. You may want to kind of take some of your profits and put it in towards a fund. One thing I didn't add, which I should have added at the beginning, all of this does not make sense unless you have a plan. I know a lot of us were talking about a plan, and that's what I develop. I develop plans for clients, right? It does not make sense getting invested into something without a plan. I find once people put together a plan, a purpose as to where their money is going, then they'll start to see different results. We want to put together a plan. These are extremely, they're high risk funds. So unless you have a plan put together, it just doesn't make sense, right? So you want to put together.
I just want to jump on there, Damian, and I think that's such a crucial point, because again, like if you this kind of gets us into a situation, I think some of us where it's like, okay, stocks are hot right now, getting into stocks is hot. So let's try and do this, without really a plan, just to try and hit a home run, which is not realistic, to be honest with you, right?
And I totally agree with you. I find once I have clients put together a plan, sometimes I have clients call me and say, hey, I want to make some money. Okay, so what are you going to do with that money? I don't know. Okay, well, what's the plan with that money? I don't know. It's better if you have a plan for that money. If you say, okay, in the next 5 years, I want to buy a house. Okay, that's the plan. The reason why is because once you're on that plan, you're less likely to come off course. So if a new altcoin or Bitcoin or Dogcoin or Catcoin, whatever comes up, you're not going to take all your money and throw it into this new investment. You know, you have this plan and you know, okay, let me diversify my risk instead of going straight towards this new shiny tool, this new shiny toy, right? All right. So basically what I wanted to say with this particular cannabis fund, if you want to get into the cannabis sector, this is a great way of getting involved in it without doing all of the heavy legwork, right? There's a lot of heavy legwork, a lot of research that you have to do within a lot of these funds. This is a great way of kind of getting exposure to the cannabis sector without doing a lot of the legwork. Any questions with regards to the cannabis fund? Yes, no, nobody?
So it's so investing in these mutual funds, I have a couple myself, but it's there, if my understanding is correct, it's more so like a longer term relationship, right? It's not so much, okay, Damian, boom, cannabis was hot these last few months, you know, let me cash out all my stuff, and is like, am I understanding right, where it's more
You're
so
extending it 100%. It is a long-term play, right? It's a long-term strategy. Um, it's a long-term strategy with your overall financial plan. So once we put a plan together, you want to say, okay, you know what, let me put my low risk investments here. Okay, then we have tier 2, okay, slightly medium to high. This is a high risk investment, right? Because we don't know what's going to happen with the cannabis markets. We do know that it's one of those things where as far as the government, they need some sort of but their budgets are not doing too well as far as there's a shortfall, so they need to get some sort of tax money. So they're looking at cannabis as their tax money. So we know that this market is about to boom. We just don't know exactly how much it's going to boom, right? So yes, it is a long-term strategy. It's something that you want to make sure that you put inside your financial plan with other things. You know, you don't want to put all your eggs in this one basket. Any other questions with regards to that at all? No?
So this particular fund here, this is with the institution that you work for, right? That you deal with?
No, see, I'm an independent broker, right? So what my job is to, you know, basically get a client, go get their financial plan, put the financial plan together, find out what their goals are, and I kind of take things from different avenues and put it towards their goal. So if they have everything else in place and they want to get a little bit, you know, put a bit more risk in their portfolio, I'll present them with something like this. And the reason I brought this up to Principal Evolution is because I've seen a lot of stock talk on the WhatsApp group. And I said, you know what, there's another way that you can get exposed to the sector without buying the individual stock. And this is one way.
Okay, I have a question.
Sure.
So how long do you have to be in the stock? Like say you have $20,000 to invest, how long does it have to be tied up in the stock?
Well, with this particular fund, they, without penalties, you want to be in there for at least 20 days, right? At least 20 days without penalty. After that, you're penalty free, right? You don't have to worry about any sort of penalties, but they do want that commitment of at least 20 days.
Thank you.
No problem at all.
Damian, what are the management fees like in this stock?
This fund is about 2.5%, 2.5% management fee.
Is that
Sorry?
is that front or back end? Are you
Well,
paying?
it depends on what we choose. So if you were to go through me as an advisor, we'd have that discussion, right? So front end or back end, we'd have that discussion. If it's back end, we'd probably reduce the fee. If it's front end, then we'd have to discuss that.
So it's negotiable then.
Definitely negotiable, yeah.
Good to know. Thanks.
No
What
problem.
does front end and back end mean?
So back end, when you do a back end, there's a fee schedule. So let's just say, for example, you say to come to me and say, hey, I want to invest in this fund, but I don't have any upfront money. I don't have that cash up front to pay you. The back end says, okay, you know what? You don't have to pay me directly, but we do have a fee schedule. So if you come out within 3 years, some have 5 years, there's going to be a penalty, right? Front end, there's absolutely no penalty, but that's when me as an advisor would negotiate with you how much you're going to pay the advisor upfront. So you're free and clear, so you can get out that fund anytime you want. Trying to answer your question? Good? Yes? No?
Good, thank you.
Any other questions with regards to this cannabis health sector fund?
Do they have a segregated version of this one? Or is it just
No,
me?
unfortunately they don't. I was hoping the same thing. I wanted them to have a seg version of this, but because it's so new, seg funds usually they need a little time for that particular sector to grow. But no, there's no seg fund version of this.
Okay.
Any other questions? I want to kind of move on to the next sector. Yes, no?
You can go on to the next one. What do you have next?
I'm sorry?
You can go on to the next sector. You say the next sector you want to discuss?
Okay, yeah, I'll move on to the next sector, which is the innovation fund. Give me 1 second.
While you look that up, like, what's the biggest obstacle you find, like, getting people to actually start a financial plan?
What's the biggest obstacle? Because I mean, it's the commitment to that plan. A lot of people I find a lot of people want to jump to the next best thing. So to stick to that plan, it's the hardest thing. I mean, I do it sometimes. Sometimes I see something exciting and new, I want to jump on it. But I find a lot of people, it takes them a while to realize that you need to put a proper plan in place in order for you to have a long-term success.
I agree, Yvonne. Lack of discipline. Yeah,
it is difficult, man. It is very hard to keep that discipline.
Would your mutual funds be the same as the ones that are offered by the bank? I was a part of a pension plan with my hoop, and when I stopped working at the hospital, I had to put my RSPs into the bank, and then they did something with mutual funds. And during COVID, I went to them to ask about where this money is. They showed me a list, and I was just like, oh, okay. Seemed like it was in different areas, banks, and all over the place. They said they were mutual funds, but over the last year, they haven't really grown. I haven't really lost, but it hasn't really grown. So what would be the difference, I guess, in regards to the fact that for your plan, it seems like the growth can be almost 50%. Like, what's the difference between what you're investing and what the bank invests in? Like, my bank is Scotiabank, for example.
It all depends on your pension plan. A lot of pension plans, to be honest, are very conservative, right? So if it's coming from a pension, and I'm assuming something happened where it was coming from a pension and you moved it over to the bank because that was your only option at the time, correct?
Yeah, that was my only option.
Yeah. So the issue with that is that's your only option. You don't know what else to do. But there's a lot of advisors out here that can take that pension money and invest it where you are making some good money. So bear in mind, when you're in a pension plan, it's generally conservative because obviously we want to save this money towards retirement, right? But once you get out of that and you move to the bank, they're going to put you into something that is pretty much safe, that covers their behind.
Yeah.
because they don't want to get into any sort of issues, right? They're not
Yeah.
necessarily always in your best interest at the bank. Um, so sometimes you're better off looking for an independent advisor. The reason I say that is because with independent advisors, what happens now is you have a selection of different options, right? You're not just
Right.
going to Scotiabank and saying, okay, well, we have a Scotiabank ETF, we have a Scotiabank fund. Here's what it did last year. We'll throw your money into that. At least
Right.
with an independent advisor, he can look at all of the different options and say, okay, you know what, based on what you have with me and what your risk tolerance are, we could put a little bit of money into this market, or we could put a little bit more money into this, you know. That's why it's, in my opinion, it's important to kind of look around, find a good advisor that can help you out and kind of diversify your portfolio that way.
Okay, thanks for that information.
No problem at all. All right, so what I wanted to do was highlight the Global Fidelity and Innovation Class Mutual Fund. Now, this fund did 95% last year, right? So it's an extremely good fund, right? As per last year, right? Because last year, global pandemic, this fund manager did a lot of great moves within this sector. Um, so their business model is to look for uh, disruptive industries so that they can invest in, right? So what is a disruptive industry? So in 1440, the first disruptive industry was the printing press. Then 1878, we had the electric lighting. 1923, we had the television. 1964, we had mobile phones. 1698, we had the steam engine. 1847, we had the telephone. 1903, we had the airplane. 1971, we had the microprocessor. 1980, we have the internet. And today, what do we have? We have artificial intelligence, genomic sequencing, Internet of Things, big data, energy storage, and of course, the blockchain. What I'm trying to say here is what this particular fund does is look for the next big thing. What's going to happen next? Who's going to be the next innovative technology so that we can invest in? I didn't show you the fund profile, but I'll show it to you after. So, an accelerating pace of change, basically, more people are adapting to new product experiences more rapidly than ever. So, the radio took 38 years, TV took 13, the iPod took 4 years, internet took 3 years, Facebook took 1 year, Twitter took 9 months, and Pokemon Go took 1 week. What we're trying to say here is things are changing so quickly that we need to adapt to all of these changes. And that's the great thing about this fund. What they're trying to do is look for the next best thing, take the funds and invest in those funds, right? All right, so they look for an array of different opportunities in IA, social media, blockchain, cloud, big data, robotics, automation, self-driving cars. They're looking for companies that are investing in the new breaking technology. So, basically we can take a lot of the growth and make some good money. So that's what this fund does. All right. So the good thing about this fund also is it has a flexible investment strategy. A lot of times what happens with mutual funds is they're put into a box and they can't kind of go outside the mandate. They have to stay within that mandate and they can't really veer from that. Whereas with this particular fund, they can do that. They can look for innovative and disruptive companies and place your funds within them, right? So we're looking at companies that develop new and innovative products and technology, companies that with disruptive business models, leaders in new emerging markets and segments, companies that use innovative technology to gain a competitive advantage. So all we're looking for is the next best thing and see if we can invest in that. Okay. We're looking also for high growth potential within these stocks that they picked within that. And we're looking for flexibility to invest in a range of innovative and disruptive trends worldwide, artificial intelligence. So just to kind of give you a view of what they're invested in, we're looking at things like Zoom, Shopify, different blockchain technologies. All they do is look for emerging companies and they take that money and try to invest into that. Anyone have any questions so far? I know it's kind of quiet here. No questions? Any? No? I'll keep going. All right. So Fidelity investment process, they look for private and public companies worldwide across all market sectors. What they're doing is looking for innovative technologies, focused on potential companies that are disruptive and innovative within that industry, and they're looking for great and fast-growing growth. All right.
I do have a quick question there, Damian, if you don't
Sure.
mind.
Sure.
What they invest in, are they limited to like the whole 60% Canadian stocks versus American stocks or international? I mean, is there a limitation?
There's actually not really a limitation in this particular fund. I'll pull up the fund profile here. 1 second. So this is the fund profile. It's not that much limitation in their stock. And then the fund manager does have a wide range of stocks that he can invest in. So there is a lot of free range. So if we look at the top 10 holdings, we have Square, we have Roku, we have Tesla. What else? We have Solar Energy. So those are some of the top 10 holdings right here. And to your point, this is not really, as far as this fund manager goes, there's not really a mandate where they can't get into a specific sector, which is good and bad. I mean, it can be good once this fund manager can find the good stock. It can be bad if they use a free range to do whatever. This is a medium to high risk mutual fund. All right, and with that, the management expense ratio is 2.3%. All right, so this is just another way of getting into the markets, getting into a specific sector without actually owning individual stocks. So you don't have to own an individual stock to get into that particular sector and make some money. All right.
Damian, what's the 3-year? How old is this this one?
This is only created 2017, so it's a relatively new fund. Bear in mind, all of the three particular investments there are relatively new. So the cannabis fund was March 2017 was the first year that it was first year it started. This one was 2017, so we don't really have a long track record, right?
Oh, sorry.
Go ahead.
You have a net return 6 months, 1 year, because it's over a year, right? Does the profile show you what the net return?
It's right there. So right there. Do you see it there? So let me pull it up here.
It was in the top left, no?
Yeah, it was in the table at the top right there.
See it there?
Yeah.
And we look at last year, it did 92%. Obviously, you can't expect 92% all the time, but it does show you the potential of this particular fund. Obviously, I wouldn't promote, this is going to make 92%, it's going to make 95%. We can't predict that, but it did extremely well last year.
Do they rebalance? Because I can see they have Royal Caribbean in there. I hope that they're going to rebalance and take that out.
Take that out? Seems like an inside joke.
Yeah, but at
Okay.
the end of the last year, Royal Caribbean did well.
Mhm.
Just on when you had it.
They might just reduce their exposure.
Actually, I have another quick question there, Damien.
Sure.
Can one who has a self-directed RRSP invest in such a fund?
Yes, self-directed RSPs, you can get into this fund.
Yeah. Okay.
One thing about RSPs, it seems like you've been kind of old school when it comes to RSPs. You've been in it for a while, or no?
Mutual funds have always been a little bit of a sore spot, to be honest.
Okay.
Yeah.
Well, what I was gonna say is, I know back in the day, RSPs, they would only allow certain funds or
Mhm.
certain investments in there. That's why when you asked that, I was like, okay, you obviously been been in the game for a while, because I know for a while they wouldn't allow a lot of investments inside an RSP.
Right.
And now they kind of open up the floodgates, like, you know what, just put whatever you want. Right?
Gotcha. Thanks.
All right. Any questions on that fund at all?
What is the actual name of the fund?
It's the Global Innovation Fund. Do you see it there? Global Innovators Fund.
Thank you.
Perfect.
Yeah, High Fidelity. Does BlackRock have something like this too? A global?
I don't know if BlackRock would have that. It's hard to
Oh.
say. I don't know about that. I do know that Fidelity has, and I'm very familiar with this fund manager. He's one of those one of those risk takers. So it is a medium to high risk fund, and I am familiar with that fund manager, but I don't know if BlackRock has it.
Thanks.
Perfect. Any other questions with regards to that? No? All right. So I'm going to go on to the last particular fund that this is the Bitcoin Trust. Now, this is not a mutual fund. It's actually an investment trust. So what does that mean? It means it trades on the stock exchange, right? So it's not a stock, but it's called an investment trust. Sorry, can you guys see my screen? Hello?
No, no, I don't see your screen.
Sorry about that. I'm gonna keep adding it. There we go. See it now? Perfect.
Yep.
So now this particular investment trust is relatively new. Sorry, let me just explain what an investment trust is. Investment trust is basically similar to what a mutual fund is. It's a pool of resources. We put money all together, but the difference is this trades actually on the stock exchange like a stock. So you could literally go into your discount brokerage firm or your discount brokerage account, and you can actually log in and purchase this. It IPO'd it was January 27th. So this is brand spanking new. So for anybody that's interested in getting into Bitcoin and doesn't want to deal with the wallet and doesn't want to deal with the key, they just want to get exposure to this particular sector, I'd say this is probably a good option for you. Because for me, knowing all this, I'll tell you, back in 2017, I lost one of my keys. I lost my key for my wallet. I didn't know what to do. I'm still looking for it, and that's in the ether. I could be sitting on hundreds of thousands of dollars right now. Don't make me cry, but I could be sitting on because I didn't realize how much you need to protect that. Now, when you get invested inside this particular trust, we have the institution take care of that for you. So this is through 9 Point Investments, right? And they'll take care of that for you. So basically, Bitcoin is a digital currency that facilitates peer-to-peer payments instead of using a bank. So a lot of people, you basically don't need a bank for Bitcoin, right? It's not government issued. um, and it's a peer-to-peer network. Called a Bitcoin network. All the transactions are on a ledger, so a Bitcoin blockchain, and it's a trustworthy ledger, and there's no sort of manipulation when it comes to that. So basically, again, this particular trust is kind of taking the legwork away from you and putting it onto this particular company, 9Point, right? The great thing about Bitcoin, they're comparing Bitcoin to the gold standard. It's something where you can take your money and put it there for a bit. And as far as inflation, what they're saying for now is it's a deflationary currency, right? So what that means is your spending power should remain the same. So as long as there's growth in the demand in Bitcoin, right, and there is a declining, just add this person, sorry, someone else that wants to come on.
Say that one more time about the deflationary. Say that one more time again.
So with fiat currency and regular currency, they just keep printing money. So anytime there's an issue, they'll print money, and that causes inflation, right? So if you look at the cost of your food, you look at the cost of gas, you look at the cost of everything, everything's going up, but your currency or your money purchasing power is not, right? So with Bitcoin, what they're saying is, okay, this is combating inflation. So as long as there's a demand, consistent demand in Bitcoin, and there's a declining supply in Bitcoin, there's basically no inflation in this. So your money power will remain the same when it comes to Bitcoin, right? Yeah, so there's going to be an upward pressure on the price. It's going to continuously go up. And what's going to happen is you're going to always have some sort of value within your currency. So money today will be worth more tomorrow versus your fiat currency. Money today will be worth less tomorrow, right? And that's why a lot of people are moving towards Bitcoin. But a lot of people are saying it's going to be more of a gold standard. So I'm not sure if everyone's familiar with when there's some sort of disruption in the markets, people say, okay, well, I'm going to pull out my money out the markets and I'm going to put it in gold because we know gold is safe. It doesn't fluctuate like, say, the fiat currency in the markets. Same goes for Bitcoin is what they're saying. It's Bitcoin's going to kind of be similar to, say, gold. The difference is Bitcoin, it's not like gold because you can't really hold gold like you can Bitcoin. You can't have gold bars in your car and things of that nature. We have a digital currency, the digital currency that it's storable. You don't have to put it in the bank or whatever the case may be. It's all digital, right? So why would you invest in a Bitcoin trust? Well, it's professionally managed. So when you're not sure what to do with your portfolio, you're not sure what to do with Bitcoin, you're not sure, they'll take care of all of that, right? They'll take care of the worry when it comes to whether I should buy, whether I should sell. It is an attractive alternative to gold. We do have this particular Bitcoin trust does have custodian vendors and counterparties that will take care of your wallet. They'll take care of your keys to make sure that everything is safe. Because I know a lot of cases people are getting their Bitcoin stolen if they don't have a proper wallet or a proper key to their wallet. And also, there's a pretty cheap management expense ratio, 0.70 management fee. So I would say this is more passively managed fund versus the mutual fund is more actively managed. All right. And I just want to quickly show you, like I said, it only started January 27th. You can put it in any of your registered accounts, whether it be RSP, RIF, RESP, TFSA. It does trade on the Toronto Stock Exchange. So if you're looking to get into this, you can literally go onto your trading account and purchase this like you purchase a stock, right? And just let it ride. That's the ticker symbol, BITC.UN, right? Per unit, and this is the Canadian version, per unit it's 17.11, market close at 17.20. So as of February 8th, it was $17.20. And this is the US version, 13.43. And obviously the risk tolerance is high. So if you're looking to get involved in Bitcoin, this may be a good alternative, because I know a lot of times it can be very convoluted to figure out, okay, well, what am I doing here with this Bitcoin key? And what am I doing? Do I sell my Bitcoin? Do I do this? If you want exposure to this particular sector, you may want to look at doing the investment trust. Just so you know, it's actively managed. You don't have to worry as much as what you're doing as far as it comes to your Bitcoin.
I would love to hear from people, like, just quickly, anyone wants to chime in, put it in the chat or anything quickly, like, what is your experiences or what are your fears with mutual funds? Because I know myself, like, years ago, I bought some mutual funds, and then, that time, that was years ago, maybe 15, 20 years ago, and it went down a little bit, and I said, the hell with this stuff. I'm out of here with this mutual fund stuff. But I would love to hear others, like, what your experiences are in mutual funds. I know Carl said that he has, and others as well, but any blockages or hopefully this may have brought some clarity, affecting this way, why to use a mutual fund. But yeah, if anyone wants to chime in or make mention about their experience with mutual funds.
I have a quick question with regards to this Bitcoin trust fund, just real quick though. I don't see any allocations here. What are they actually?
It's straight into the Bitcoin card.
So it's just straight Bitcoin.
Straight Bitcoin, no other. That's it. And it's relatively new. January 27th is when it IPO'd. So it's brand spanking new. IPO'd at $10. It's at 13 right now. So to your point, there's a lot of questions still there, right?
Right. Like, how do they come up with the valuation of the stock versus the valuation of Bitcoin?
Yeah, there is a matrix that they have online. I could send it to you. I did not put it in this presentation, but if you want, I could send it to you so you can get some more information, and so you can kind of figure out, okay, is this a good investment for me?
Awesome, thanks.
So to Kelsey's question, has anyone invested in mutual funds before?
I mean, the investment of mutual funds, I think, the investment of mutual funds, I think it's a good tool. I mean, I think that in this group we talk a lot about real estate, Bitcoin, and everything, and it's important to have a balanced portfolio. So, I mean, part of your portfolio should include some real estate, should include some mutual funds, and any other investment vehicle, just to be as balanced as possible, because I mean, you don't know what's going to happen. You just need to protect every angle, right?
Yeah, no, I totally agree with Derry when he says that you want to make sure that you have your stuff diversified. Now, if I'll just kind of reiterate what a mutual fund is. It's a basket of stocks. So you could take a little, for example, if you wanted to do a bank mutual fund, you take a little bit of RBC, you take a little bit of TD, you took a little bit of CIBC, and you put it all into one fund. And from there, you want to see if we can get the best return, depending on the fund manager and how he does when he's investing into that sector. So most mutual funds have different sectors. So you'll have a bank mutual fund, may have for example, innovation mutual fund. You'll have a cannabis mutual fund. All of the mutual funds are put there in order to get the best return on your investment.
Make sure you put your information, Make sure you put your information, Damon. Sorry, go ahead,
No. I was just going to ask a quick question about what made you choose these three funds to actually bring to the forefront tonight. And the reason why I'm asking that is because there's a whole slew of mutual funds out there. You know, Kelsey, you could probably relate back in the day of Templeton and all these other funds, which literally did not have even 10% increase. And then by the time they took their 5% on the front and the back end, you were left with nothing. So your fund was literally just sitting there being your money being eroded. So the question so you could tell I've been stymied by mutual funds.
I can tell.
Right? So why should we really take our money and or consider taking our money and putting into these funds here?
Okay, so to your question, the reason why I pick these funds for that very reason, I find a lot of, well, back in the day, a lot of the funds weren't making good returns. And what I'm finding now is there's certain sectors that a lot of people are focusing on, whether it be the marijuana sector, whether it be the Bitcoin sector, or to be at innovation. I wanted to make sure I captured all three to show you guys there's another avenue of just stock picking. Stock picking ain't easy. Trust me, it's not easy. It's not easy to pick the right mutual fund, or sorry, the right cannabis cannabis stocks. I was telling a couple people, like, I find with the cannabis industry, what's going to happen is we're going to have a whole heap of cannabis stocks that are going to emerge because everyone's going to get into it. People are going to buy these individual cannabis stocks. So what's going to happen is we're going to start seeing a lot of consolidation, meaning these bigger cannabis companies are going to start buying out these smaller companies and kind of getting rid of all these little small players, right? I don't know which one that's going to happen. I don't. I can't predict that. That's for the fund manager to figure out. So instead of me going out there and picking out these individual stocks and kind of trusting in the Lord to say, hey, I'm gonna get the right stock, why don't I get a fund manager who's actually gonna call these fund companies, these stock companies, and figure out, okay, what's going on with your company? You know, what's going on here? I'm looking at your balance sheet, something's not right. I'd rather put my trust in them, especially when it comes to these emerging markets. Bitcoin, same thing. I can't gauge what's going on with Bitcoin as far as which one's going to be the next big thing. Why don't I take that risk and put it onto a fund manager? So that's one of the reasons I did that. And plus, it's a hot topic. A lot of people are interested in getting into that. Trust me, last year, 2020, 2019, we got so many calls inquiring about marijuana stocks. It was ridiculous, and I can't always pick the right ones. I'm not a genius like that, you know. I don't do enough research like that, right? So I rather take, especially when it comes to emerging markets like a cannabis and a Bitcoin, I rather take my money and put it into someone that's actually sitting there 9 to 5, sitting behind the desk, figuring that stuff out. Because I don't do that 9 to 5. You know, I deal with clients' portfolios, I deal with putting together plans and doing things of that nature. I can't sit behind a computer, or I can't even call a company and find out what's going on. And that's one of the reasons why I want to kind of touch on the hot topics, the hot commodities out there.
Makes sense. Looks like we have a question here quickly as well. Quickly, Damian. It says, based on my mom's account, she had a mutual funds, but it hasn't moved. Very new to understanding these things, but again, it hasn't moved in 2 years except drop last year because of COVID. So what could have caused that? What do you suggest?
Okay, first of all, I would assume, I don't know that she has this mutual fund with the bank. The problem I have with putting your mutual fund into the bank is they're not putting enough effort into actually making you money. That's one of my issues with the bank. I used to work for a bank, and we kind of just say, oh, well, this is the risk profile of this person. We're going to put you into A, B, or C. And that, you know, I don't agree with that, right? Then it comes down to your risk tolerance. If you filled out your risk tolerance a certain way, they can't put you into anything else. They have to put you into a certain sector of funds at the bank. That's why I'm assuming it is at the bank. I'm not 100% sure, but I'm assuming that that person who asked that question has that mutual fund at the bank. In 2020, if you're losing money on a mutual fund, you need to fire your advisor. You shouldn't have lost money in 2020.
So
when it
just
comes
quickly,
to fund.
quickly, so like, do you find that people are not revisiting like their mutual funds that you just mentioned there? Do you find that people just kind of, just leave it there and then, it's a mutual fund, it's going to take care of itself? Is that any of that taking place?
And that's exactly it. And the thing that these banks have done to us has really programmed us really well, right? You see the RBC, you see the TD, you see the CIBC, you think of trust. When I look at RBC, I feel like I trust them, but we shouldn't be trusting them. What are they really giving us in return? What are they doing for us? They're not really helping us in the long run. They're kind of getting us to put our money with them and not make any money. Prime example, and I'll say the banks were so brilliant in doing this. 2009, TFSA comes out and they say, TFSA, tax-free savings account, the government says you can put $5,000 into a TFSA. And the banks ran with it. They said, okay, yeah, open your TFSA savings account with us. People said, oh, I'm going to save on taxes. People ran to the banks, put their money into TFSA, threw all their money into TFSA, say, hey, I have my money in my TFSA, so I'm saving on taxes. Wait. How much is the bank paying you? I don't know, 0.25%. Well, you're not paying taxes on that, regardless if it's in a TFSA or in a TFSA or outside of TFSA. You're not paying taxes on that. So how are you saving? They're so brilliant on doing that. So everybody ran to the bank, threw their money into the TFSA and say, I'm saving on taxes. How are you paying taxes if you're not making money? So I say that to say, when it comes to the banks, people are kind of wising up, and I'm seeing a lot more information on Instagram and social media where they're saying, you know what, look into what the bank's providing you and kind of revisit that. And to your point, Kelsey, a lot of people just kind of throw it into the bank because they trust the bank and they let it ride. Say, okay, it's with the bank. I don't have to worry about that, but they're making money on your money. What the banks do is they take your money and say you put it into a GIC. They know you're going to make 0.5% on that. They take that and they're allowed to use that money to lend out for mortgages. It's in their mandate that they're allowed to do that. They're allowed to take your money, invest it in a GIC, and lend it to mortgages. And that's where they make their money. And I think more people need to be aware of that, especially when it comes to GICs. When I hear GIC, it just makes me cringe.
So we have a couple minutes. We're gonna wrap up. I know we're over time. We're gonna wrap up for 9:30. Anyone else want to chime in, asking Damian any other questions about any of the funds? Obviously, you could definitely reach out to him. Damian, you should probably put your information in there as well.
Yeah, let me put my information here.
Hey, Damian, I have a question for you. It's Cedric here. Can you hear me?
Yeah, I can hear you. Sorry.
All right, perfect. So you talked a little bit about ETFs, and then mutual funds. I mean, from my understanding, they both comprise of a variety of different companies, usually amongst the same theme. So what's the advantage over an ETF compared to a mutual fund? Is there one that's better than the other? Like, what are the pros and cons when comparing the two?
So ETFs are great, but they're passively managed. That's the only thing I would say about ETFs. When I say passively managed, we don't have someone behind the scenes making investment decisions. So ETFs, generally speaking, not all, are balanced quarterly. So every quarter they'll look at it and say, okay, maybe we should take more of these funds and cash it out and put it into these funds, or we should take more of these funds and put it into that. Now what happens with a lot of mutual funds, they have active managers, meaning someone's behind the desk looking at particular stocks and seeing what can be sold, what can be bought, and things of that nature. Right now, mutual funds are kind of getting bashed by the public. So now they realize, okay, we got to get better returns on our funds. We got to outperform these ETFs, and we got to make sure we do it tenfold. So we're putting these active managers in mutual funds to the test. So now that they have the gun to their back, they know that they got to make a lot more money than in previous times. I know a lot of people were on this call were saying, I lost money in mutual funds. Trust me, in the years coming, they're going to start trying to make some more money, because these ETFs right now, picture it this way. If you have an ETF, you're paying maybe half in fees. Why would I go to a mutual fund? Why am I going there? Well, because they're not making me more money. So now these managers, now they're thinking, okay, well, now I got to figure out a way. We got to make more money. And I can't remember who asked, but there was a point where we're asked, okay, well, this particular fund, do they have latitude? Can they do anything? What I'm seeing now with these mutual funds, the companies are allowing these mutual fund managers a lot more latitude to do more things. So they're allowing them to take a bit more risks, because they know that their ass is on the fire and they got to outperform these ETFs, right?
Okay, so just generally you're saying there's just been a global shift. People are a bit more wise now.
Oh, for sure.
People are a bit
Oh,
more
for sure.
aware. Okay, because I mean, even returns you mentioned there, I'm like, I've never seen those on mutual funds before. 'Cause, like,
Oh,
you just
trust
see
me,
it over the
it
year.
is huge now. I remember, and let me just put my stuff in the chat here. Give me 1 second. But
I could comment this one quickly. Usually ETFs, yeah, exchange traded funds, yeah, ETFs are cheaper. The
Yeah,
management fees are usually a lot less, and
a
that's
lot
why a lot of
less.
people has
Absolutely.
ran to them. Because if you read a lot of investment books, they talk about your management fees, and that's something you should watch. And especially if you're paying management fees and your funds aren't doing anything, yeah, you need to go. You basically need to fire your advisor, because the
Yeah.
whole goal of it is your money should be growing. If it's not growing, you need to do something about it. So at the same time, you should also check your investments yearly, see what's going on. If it's not going the direction you want, you need to just do some investigation. Yeah, or maybe fire your advisor, try something different.
And to your point, Kevin, I wouldn't even say yearly. Nowadays, you want to check it quarterly. Like
True.
right
You're right.
right now, it's just one of those times where there's a shift. And I remember I was working at RBC Direct Investing, and discount brokerage firm. Some of you may have direct investing accounts, and I just remember, and this group is so amazing, because I remember not being able to talk this stuff. This out of what it was like 80 something people inside direct investing. There was 4 black guys. Right? There's 4 black people, and those are the only guys I could talk to about investing and things of that nature, right? So it is a joy to see a lot of all of us black people coming together, asking questions, trying to figure things out. Because trust me, like 8 years ago, 10 years ago, I didn't have any of this. We'd be at the water cooler, 4 of us, and all of a sudden all the heads turn like, what are they plotting? Like, but it is really good to see that everybody's involved in trying to figure out how I can invest my money better.
Damon, one last question before you go. So, with stocks, I think one of the things I like, ETF stocks, you can plug in, you can see it any day. I can pull it up on my phone now. I'm going to see the cost. I'm going to see, what it traded at, what it closed at yesterday. With mutual funds, like the funds that I did have a while ago, I mean, it's whatever. You're getting a semi-annual statement, in some cases annual, in some cases quarterly. And it's just too, like it's 3-4 months is just too long of a time, like, you know what I mean?
Yeah. So mutual. Sorry. Go ahead. Sorry.
No, just saying, is there an online platform with most of these funds where you can just tap in and see what's going on a daily now, or?
Yeah. So mutual funds price daily. They're not at the minute, but they're at daily. So what happens is, because they're invested in so many different stocks, they got to at 4 o'clock they got to do all the pricing. So whatever each and every stock closed at. So they have literally people. Sure, they have computers now. I'm talking back in the day, but they have people calculating to see, okay, what did this fund close at, and how does that correlate to the position that we have in this fund? So by 6 o'clock is when they are kind of mandated to update that fund's price. So daily, you can definitely check that fund, but the quarterly statements or the statements that are sent out to you, they're not mandated to send those out. So if you wanted to find out the price of your fund, you can go online and definitely find that out the day of. after 6 o'clock, right? But it's not like a stock where you get at the minute price, because they got to take all of these stocks together, kind of price it and figure out, okay, how much is this stock worth compared to the overall fund.
Understood. All right, cool.
Any other questions? Everybody good with that?
Yeah, I think we're already a half hour over. It's good to have that extra discussion. But we could take one or two more questions if people have, or we'll wrap up for next month. Again, if you have any questions, you always could reach out to the speakers or ourselves, the organizers. Also, if you want to hear about topics that you're interested in, please, you can let us know too. We'll bring that on. We'll try to find somebody to discuss it, or we'll have a bigger discussion here in the meetup. But again, I want to thank Damian for coming on again and sharing his information. Again, you can always reach out to Damian if you guys want a second opinion on where your investments are, what mutual funds you're in. He could give you a whole assessment. It doesn't cost anything. So he'll come and give you an assessment, and you could decide if you want to go with him or take his advice or not. But he's always willing to help sit down with you on an individual basis and go over your finances with you.
And I just want to say also, like these funds, they're not the end all be all. This is a part of the overall plan, right? I want to stress that this is a part of the overall plan. I want everyone to realize, okay, there's no kind of get rich quick scheme. This is a part of the overall plan. So I want to make sure that you have your insurance in place, you have all of your investments in place, you have proper cash flow. This is at the higher level when you're ready to invest. Okay, you know what? I'm ready to take a little bit more risk. Let's put these into my overall plan. Cool.
Okay, so again, I want to thank you, Damon, for coming on. We did have some admin stuff to discuss, but it's already late, so we'll discuss that next time. We are planning some things around moving our chat off of WhatsApp, and I think we're moving to Slack. I think we could have a clearer discussion there, and we could break up the discussion like real estate versus land purchase versus stock versus crypto, which would be easier for people to follow along. So just keep your eyes open for that. If you don't have the app Slack as yet, I suggest maybe you download it, get used to it, and we can start inviting people. We're still trying to find out the kinks and how we're going to use it, but I think it'll be a better discussion there than on WhatsApp, because I think there's a lot going on WhatsApp and it's hard to follow right now. So we're trying to find different ways to make it easier. Secondly, we are looking for 2 individuals to help us. We're trying to, with specifically creating content for financing and how to help our people get out of this rut we've been in financially and improve the state of ourselves. And secondly, to help organize a lot of the information that's shared and how we could store it on our website and kind of just be more organized with our information. So when people that are new come in, they can get all the information that we had maybe months past. So we're trying to figure out ways how to make it easier and better just to store our information. So we are looking for 2 individuals to help us with the organization and making Principal Evolution, just taking us to the next step. So if you're interested in volunteering and helping with us, please let us know. If you have any questions, again, reach out. Don't be shy. And you'll hear more about our transition from WhatsApp to Slack, because I think it'll be better for us to get a discussion in and people to follow along in some of the discussions going on. Okay? Kelsey, did you want to say anything else before we wrap?
You don't have to go home, but you do have to go.
All right. Okay. Again, I want to thank everybody for spending their time here to gain knowledge. Again, next month, during the month, please think about something you could bring to share with us, some knowledge, how much you've grown and what you've done. And again, this month, our theme is action. So you can learn and learn and learn, but if you don't take action, the knowledge is wasted. So we want to take action this month. Anything. It could be even starting your budget, tracking what you're spending your stuff on, maybe analyzing your mutual funds. Action. We want to do action this month, and hopefully we could share next month. So I think it's March 9th is the next meeting, and you guys should get the information soon. And we'll send this meeting out probably within a day or two, so people could review it. Okay.
Breaking news, bro. Breaking news. Those who hear it now, just leak to everyone right now. I'm probably gonna have Vanessa Braxton on next month.
Oh, boom.
She's a boss. She is a boss, and she owns a whiskey distillery. She turned her manufacturing company into a hand sanitizer. She's doing big things in Gary. She's an engineer, husband, big thing. So we're trying to lock in for March, and it'd be very interesting. For, a Black woman owns a manufacturing plant and all this. So yeah. So that's kind of breaking news. Breaking news. So.
That'd be big. We need to expand our vision. We're starting off small, but all of us need to have a massive vision, because usually when you set goals, 9 times out of 10 the goals are too small. So try to increase your goals and stretch for them. But again, thank you everybody. Have a wonderful night. I have things I have to do, so I have to cut off the Zoom. All right, easy. Take care, everyone. Thank you for joining us.
All right, peace. Good night.